Welcome to the Daily Volatility Box Report for August 19th, 2019. We are TOSindicators.com, home of the Volatility Box. One of our members described today's price activity in the indices best. It was like watching paint dry. Once we had the morning move, we essentially just chopped sideways and price action didn't get remotely close to any of our edges for the volatility box. Therefore, we had zero trades in each of the four indices. However, the 30-year bonds, on the other hand, did offer us some opportunities to fade the edges. We had a total of 3 trades in the 30-year note, the symbol ZB. All 3 trades were winners, and our net P&L using 2 contracts was $968 and some change. Let's go through the charts. We'll cover the indice markets really quickly to talk about which volatility box we used today and what price action looked like, and then we'll cover the 30-year bonds. My drawing tool is not working too well today, so bear with me. I'll be using the Thinkorswim built-in trend lines to essentially communicate the point, at least for today. Let's get started. We'll start with the S&P futures first and approach today the way we approach all of our markets. We currently have the aggressive volatility box plotted here, and we look at the first 30 minutes of the market open to essentially see whether or not we breached either side of the volatility box's entry lines. Here, as you can clearly see, we hadn't, and that was our cue to use the aggressive volatility box for the rest of the day. Now we began to look for breaches against these cyan lines, which we didn't get anywhere across the day. This is what I meant by it was akin to watching paint dry. You had your morning move right here, and once the lunchtime doldrums, the East Coast lunchtime kicked in, we essentially just chopped up, down, and up, down, and up in a fairly narrow range. I think this was less than 9.5 points in total, which for those of you who've seen some of our previous trades, some of those winners in themselves have been just 9 points. And so I think that was a testament to what today looked like. Quickly cycling through the other markets, looking at the Nasdaq, we had a very similar situation. We ended up just chopping sideways. Same thing with the Dow futures, getting nowhere close to any sort of edge at all. And finally, the Russell futures. So this brings us now to the bonds. If we take a look at the bonds, this was a slightly different story. We'll approach this, once again, the way we approach the S&P markets and all of our daily trades. We look at the first hour of the full trading activity. The bonds open at 5:15, so we use the 5 to 6 a.m. Data to essentially determine which volatility box we use. And if you've noticed, this is a pattern. We use the first hour, essentially the full hour of data to make our decision, choose the right models, observe, and then we go forth with a plan of action. And so here, this was our cue to use the aggressive volatility box, and we began to look for breaches of the entry line. Our first breach took place right here at 164.14 on the bonds. Our stop was 4 bond ticks outside. Each tick on the bonds is worth 31.25. And so our stop was right outside of the volatility box clouds, with our first target being what we risked, so the 4 ticks, which was hit right here. Our second target was determined by the entry line, which was 6 points out right here. Sorry about these trend lines. I know they're messy. I'll do my best to fix the tool, just being glitchy. But anyways, so we had both of our trades be successful here, our shorts in the bonds. With the first one, we took out at a target of 4 ticks, and the second one went down to our target line for 6 ticks. Our second trade in the bonds came when we hit our target line from the previous trade, where we went long at the 164.07 mark, right at this entry line right here. Our stop was right outside of the volatility box. This time we had to give it a 5-tick room, and so our first target was once again the 5 ticks, which was hit right here. And our second contract never made it to the actual target line, and so the second contract stopped out at a break even. So our first target hit here for a gain of 5 ticks, and then our second contract was taken off at break even once price action came back down and took out our entry. Our third and final trade on the bonds came right before we headed into the last hour of the market close. Actually, not right before, about 30 minutes before, where we fell into the volatility box. Our last trade in the bonds happened when price fell perfectly into the volatility box entry line, and this was our point to go long. Our stop was outside of the volatility box, set 7 ticks outside, and our first target was once again the same 7 ticks, which was hit right here with our 3 p.m. open, And then our second target was 9 ticks, which was also hit in that same burst move up. Once again, this trade, we hit both of our targets, both target 1 and target 2, for a total gain across our 2 contracts of 16 ticks. To summarize, while the indice markets today didn't provide us with much opportunity at all to have any sort of edge at the edge, the bond markets did. We were able to trade the bond markets. We had modest returns, 3 total trades. All 3 trades were winners, which is always a good feeling. And our P&L with 2 contracts was $968. That's not bad for a Monday, but I do hope that the volatility in the indices picks up and we get action similar to what we've been seeing for the past couple weeks, where we haven't really need to go outside of the indices to look for trades since they've given us plenty. However, we'll take the wins when we can get them, and we look forward to another exciting day of trading tomorrow. Thank you and have a great night.